Hey, 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 everybody. Welcome back. Oh, it's a cloudy, semi-cloudy Wednesday, boy, but it's a golden, gorgeous day in here because it's episode number 50. It's our golden anniversary. Oh, boy. I don't know if that's a thing because there's 52 weeks in a year. So technically, we're really at number 50, so it's not that much of a big deal. But we're making it a big deal today. I've got my man Geoff back with us today. We've got our man Joe with us to celebrate today, your financial guru. We've got so much to get into today, so let's not waste any time. Let's kick it off. Geoff, buddy, how you doing, my man?
I'm doing well. I'm doing well. Just came off of the Medallion Awards here in the Greater Vancouver area. Was a great event, and lots of good connections there, and lots of good conversation. Actually, just had a great conversation with Joe that we're going to get into on our next guest pod with him. But
Right
uh,
on.
but not on this guest pod. It will be on the next one. So I won't ruin the excitement on that one.
Nice. How your dancing go?
Um,
Did you trip on your
yeah,
two left
I
feet or what
didn't I
happened?
didn't I didn't do my two left feet shuffle. Didn't really kind of get into that, but
Why
yeah,
are
no,
you lying, Geoff? Why don't you just let everybody know that you were breakdancing out there?
No B-boy
Geoff, come
stance.
on. You listen. Geoff, just tell everybody that you were out there doing the robot. You had everybody, the whole crowd was going. They were saying, Geoff, 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 Geoff.
I
Right?
wish doing that for
Come
the
on.
sprinkler.
Right, there it is. The grocery cart. Everybody loved the grocery cart, if anybody remembers that one.
Right, right.
Drive the cart and take it from the shelf. Take it from the shelf.
I actually haven't heard that one. I'm gonna incorporate that one into my routine.
There you go, buddy. There you
We're
go.
aging ourselves on that one.
You
That
know what?
is
I
that.
don't.
That's an old one.
This pod's gonna take forever, but now that you go into this breakdancing story, when I was a kid, probably grade 5, um, a guy that I know says, "Oh, you got to join my breakdancing team," and and I'm like, "No, I don't think so," because if you were ever to see me on the dance floor, I'm actually going to do the grocery cart now. I like that.
What do you see? There it is. What are you talking about? We could have Geoff Lee and the Fly Boys. Like we could have had Geoff Lee and the Fly Boys, man. That would have been amazing.
Yeah, no,
Oh,
I
Geoff.
have two left feet. I think I'm a really good dancer, but if anybody was to say take a video and say this is what you look like, I'd be like, nah, no way. I got way better rhythm with that. It was like one time when I was playing hockey and they were videotaping, and I just felt like I had the greatest game of my life. And then I saw it, I'm like, no, I'm a way better hockey player than that.
Hey, as long as
Oh
the
my
stats
God.
are proving it,
Well, that's the
Right?
problem. The stats don't prove it either. So that's the other problem.
right.
That's
But
awesome.
yeah, you look faster. You look like you got hands, but you're like, why do I look like I'm standing straight up? And that spinorama move that I did felt so much way cooler than what this thing looks like.
I didn't
So,
fall in my head.
back to even you, Alistair. You played high university level football. Like
Yep.
Oh, wow.
Yep.
I've seen that on TV, and that's like so. You know,
Yeah, I'll tell you though, it's funny, like when you to your point, when you watch yourself and you think, okay, I'm good enough at this, I was good enough to make it to this level, like wow, and then you watch the next level and you say, yeah, but I was not good enough to be right there. Right? Like
Mm.
it was like I was pretty good, but nope, not that level right there. I was not good. I thought in my head a lot of those moves looked just as good as that guy. No, no, no. They really didn't. That's why they looked good in my head, not on the field.
The funny thing is, like, I'm a basketball guy, so
Oh, there you go.
I'm a little guy though. I'm 5'8", but I used to be definitely. I feel that whenever I make a move, I feel like I'm about 3 feet forward from where I'm actually at. which means I stumble more than I even like do anything nowadays. It's
Then
crazy.
you're making. That's amazing. That's
Like,
amazing.
I'll just be
Well,
running
boy.
and all of a sudden I just fall down and I'm like, no one's beside me. What happened?
I had my buddies do one of that. He tripped on the line and he's going to the end zone. He tripped on what was it, the three? He tripped on the 3 yard line. And
But he rolled in. He broke the plane, so he still got
oh
the
no, no,
touchdown.
no, 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 no. The thing is, in university and high school football, it's not like the pros. Once your knee hits the ground,
Oh,
the play's over. So the only person that tackled him was the 3 yard line.
That's hilarious.
Clear as day. He's going in and then boom. What happens?
he was saving that TD for you, Allister.
That's it, man. Everybody's got those stories, though. Everybody's got those stories. But boys, we got a lot to get into today. Let's kick it off because I've got actually a really cool did you know? I think this is actually super exciting. So I want to get your guys' thoughts on it. So, boys, did you know that the city of Vancouver is planning a new residential project near Science World featuring 780 rental units?
Wow.
Yeah. So according to plans from the Vancouver Housing Development Office, the project would include 2 residential towers as part of a rezoning application. So the site, currently a surface parking lot next to the McDonald's near Science World, is city owned. So everybody knows that where Science World is in that big, massive parking lot. Like a lot of it is used, they use it for Canucks games and all that sort of stuff. So yeah, so that's city-owned parking. So the proposal describes the development at Main and Terminal as a high-density, mixed-use project aimed at creating a more vibrant, transit-friendly neighborhood. All 780 units would be market rental homes owned by the city.
Oh, wow.
Yeah, that's the big deal. Owned by the city. So this initiative aligns with a 2024 policy allowing city-owned land to be redeveloped into housing. Under this policy, up to 5 city-owned sites, including this one, will be transformed with profits going toward infrastructure upgrades, community amenities, and affordable housing projects like co-ops and social housing. Yeah.
I like that
So
idea. It's a great area. I'm curious, what kind of housing is it going to be? Is it going to be?
So I'll touch on it. Here we go. So the design features a 6-story podium with street level retail space. Above it, there will be 2 towers, one reaching 25 stories and the other 42 stories. So the podium's rooftop will include a courtyard and urban agriculture. And so right now, the rezoning application is currently open for public feedback.
So what is it going to be affordable housing? Like I don't know if they jumped into what is that rental output?
It's going to be market rent. Market rent. It's market rent for Vancouver, right? But it's city. So this is what I'm saying. So it's going to be interesting how the market rent is determined, because a lot of what market rent has been, rental rates have been, is really been by investors, right? The city has kind of had to step in and start setting, quote unquote, what the market rent is going to be. So it's going to be interesting now too, with more city, right? With more city-owned apartment housing, right? And then them trying to encourage more developers, right, to build purposeful rental buildings, right? To see what that does do to the rental market if now we do see those dollars fall, right? And if we do see more affordable rents come in.
I'm just interested in what is affordable rent. I'm working on a file right now on a 1-bedroom condo in Burnaby.
$3,000?
$2,300.
Yeah.
And on a place that's quite old. So I'm thinking a brand new apartment in really a beautiful part of Vancouver. What is that 1-bedroom going to go for there? And if it is $3,000, where is the marketability for affordable housing for $3,000 a month for a one-bedroom condo in Vancouver?
Right.
Well, I don't know how they're going to put it. From what it sounds like, is they're making it affordable housing. So
Even if it's 2,200, right? Like that's
no,
still a lot.
but you got to understand though, what some of it might go to is people on assistance, Jeff. That's how you create some of these projects as affordable housing, is because some of it will entail, right, people on social assistance, right? And that's how you quote unquote create your affordable housing and market rents.
Well, and that's what I mean is what is that target group?
And I think that's going to be a lot of it will be social housing. I think that will be a good portion personally. And again, the application's still open, and it says in here that it's that the profits are housing projects, co-ops, and social housing. So that's the intent of all of these five city-owned lots is to create these co-ops and social housing. So to me, it sounds like a portion of it will probably include people on assistance.
It's just sorry.
I was just going to say that across the street there's actually a modular housing project right across the street from there. And so I don't know if it's still finished, but that's actually supposed to be for that type of project. It's not as big as 25 stories, but I think I was just there yesterday. I think it was like at least 7 or 8 stories. Okay. And that's modular housing.
It's very interesting, just the part of the city that they're creating social housing in, right? Because it is a gorgeous part of the city, right? Like right up on the water. So good on them. Good on them. I'm curious to what that's going to look like.
Yeah, and like I said, it's open for public feedback, so it's going to be interesting to see what the public feels about it, and if it does get its legs, and if it does move on. If it does, it sounds like something pretty exciting.
Yeah.
But also that area is really congested. So in terms of the infrastructure that you're looking at, yes, you're going to get the city rents, but are they going to build more infrastructure with that? Because I mean, that SkyTrain's not going to do much. You already look at Olympic Village on like 12 o'clock. It's a nightmare. Just to get downtown, it's a nightmare, right?
Yeah. That whole part, that whole part right at Terminal's got to change.
Yeah, exactly.
So let's jump into this. Joe Tablan is back for our 50th episode. I think he was with us. I don't even remember.
Welcome back, Joe.
But welcome back. So just to reintroduce yourself, Joe, tell us a little bit about who Joe Tablan is, just for those people who are getting reintroduced to you or haven't quite formally met you yet. Who is Joe Tablan? What is he all about?
Geez, well, first of all, thank you very much. I didn't even know this was the 50th, so this is huge.
Yeah.
Right? I got to come correct here. But I've born in Toronto. Not my fault, but raised here in Vancouver. Did the whole gambit here. Got into finance or planning in 2012, and actually started off with an agency, and struck out on my own in 2017, and just been providing financial planning for corporations ever since. Live out in South Delta with my 2 boys, and we just living life.
And what are some of the hobbies you like, Joe? I know you're a big basketball fan. Standing at 5'8", you're a pure powerhouse on that court.
Yeah. So I'm small, but I'm feisty, right? So definitely a big sports person. I watch everything under the sun, but I also like to play basketball. Work out. So I'm in Langley right now, and just probably going to go to the Club 16 for a little bit. From there, it's just, traveling. Traveling right now is huge. That's the one thing that we like to do. So, me and my girlfriend, we're big Europe kicks right now for the past 2 years, and we'll see if we can get another one here going.
Yeah, nice. Where are you planning on going to this year? Or what's your favorite part of?
Yeah, where's your favorite place you've been? Where's your favorite?
Right now, I always tell people, if you've never been to Europe before and this is your first time going to Europe, go to Rome.
Mm.
Home is like the center of everything. It's so easy to
Mm.
get everywhere. I love it. I love the food. I love
Amalfi
the
Coast is
tourists.
better, Joe. I'll argue the Amalfi
I
Coast
gotta
is
I
way
gotta go
better,
down
buddy.
there for
Yeah, it's
sure.
way better. Yeah.
Well,
That's
well,
what I
gentlemen,
hear.
well, gentlemen, I think September we're going to Italy on that coast to a place called Puglia, I think.
Ah, yeah.
Okay.
So I'm glad, Joe, I asked you this question. This is a must do on your end, so it's a must do on my end. And and just a little bit about your company, Clearpoint. I know that you started this back in 2017. What provinces do you practice in, and what type of clients are you looking for, or what type of clients do you really specialize in
Mhm.
helping?
So I started Clearpoint Wealth Management in 2017. Basically, like I said, I was in the captive agency wise, being able to provide with one or two products. And here I just said, you know what, I want to be more of a broker, kind of like how you are, right? As opposed to being with the banks, I just wanted to be more independent. So I started that corporation in 2017, and um, basically my ideal clients that I work with really have three problems. They pay too much tax inside the corporation. They want to keep the money liquid so that way they can grow their companies whenever they want to. And they want to transition that money in a tax efficient way to the people that they love the most.
Right. That's good. That's good. Well, one of the things that we want to talk about today is the myth in personal finance that just aren't true. There's so many people out there that just have misconceptions about personal finance. You know, they're hearing from their buddies, on the basketball court.
Mm-hmm.
They're hearing from their coworkers by the water jug. They're being misinformed by media. So I thought this was a great topic to talk about the myths of personal finance that aren't true. And one of those things that we always hear is that debt is bad.
Mm-hmm.
So I'm really kind of curious about your insight on when you hear, hey, debt is bad. Like what's your insight and comments on that?
Honestly, I think that for one, you're right. Our system is kind of luring us into a way that we um, were back then, back in the 80s. Back in the 80s, we're like, hey, you know what? Go get your job, work till you're 65, save your registered and non-registered. We'll give you the golden watch, and then from there, enjoy life,
Yeah.
right? But all those times, we haven't really been able we have to stock our money and things like that. But the thing here is that we're geared towards saying that debt is bad because of the fact that, okay, our debt service ratio is really, really high in Canada. Thing is also is that we're also creating more assets.
Mm.
So when people say that debt is bad, I think it's a misconception because of the fact that it depends on how you use debt. Obviously, you can say that debt is bad, but for the most part, guys, I don't know about you, but it's given you an education. It's able to give you the car that you drive and the house that you live in. And by using it correctly, I think you're living a pretty good life. Yes, you have bills to pay, but it's also giving you more assets over time.
I always say there's good debt and bad debt, right?
Definitely.
Yeah.
And Alistair, what was that statistic? If you're a homeowner at the age of 33 and a homeowner at the age of 65, what is the net worth again?
I believe it was if you rented, it was $44,000. If you owned, you were at
At the age of
$444,000
35.
at the age of 35. And at the age of 65, you were worth, yeah, it was 1.14 million. If you were worth 1.14 million. If you owned, if you did not, you were worth $11,900
Yeah.
at
Wow.
65.
Yeah.
$11,900. And that was one of the things I was kind of chuckling with debt. That was one of the things that I was always taught is that debt is not great. It's not what you want to have, but there is good debt and bad debt, and it all comes down to how you manage that debt.
right? It's you don't want to take on bad credit cards and have credit cards loaded up with stuff that you bought, right? That's bad debt, right? With like junk that you bought at the store and TVs and candy and cookies and all that sort of stuff. That's bad debt, right? So it's how you manage your debt and controlling your debt.
I think it's also managing your expenses. So managing your expenses, you can actually, instead of saying, okay, you know what, I take what I make for my job, minus my expenses, and whatever I have left is what I'm going to put away. That's great. But to accelerate that, you can leverage. And leverage is I think the operative word versus debt, because debt is, yes, it seems bad or whatever. But when I have a house, and I say, you know what, I'm going to leverage the equity in my house to go buy a second rental property. That doesn't sound so bad now, does it?
No, it's beautiful. Those are beautiful words.
But yet, it's still debt. You're just using it to your advantage and using the interest rates as a tax deductible event, right?
Well,
and so,
even to add on to that, I'm working with a client, an older lady, and we're working on pulling that equity out to consolidate some of the bad debt. And to me, a bad debt is something that depreciates versus a good debt, which is something that appreciates. Right?
Yeah.
But I also find that people are trained to think that all debt is bad, and they don't really have a good foundational knowledge of good debt and bad debt. And working with this elderly lady, she has equity within the home. Her rate right now is over 5.5%. She owes $15,000 on her car. And when we're working on this file to say, hey, let's get rid of let's do a debt consolidation here. Let's use some of this equity and pay off some of this consumer debt. And at the end of the day, the numbers are going to work out in your favor. You're going to save yourself about $400 a month, right? Which is about $4,600 a year. And in the course of these 3 years is about 12 grand. But her mind is like, well, I don't want to add to my mortgage. I want to leave everything to the same because I don't want to have a bigger mortgage.
Right.
In her mind, it feels less. In her mind, it feels the bigger mortgage feels like so much more than the debt she's got right now.
Right. Yeah. And I had to explain it to her. I said, look, if we can do something that's going to give you $400 more a month, and basically all you have is one payment, is that something that you would like to do? Like, could you use this $400 extra cash a month? Would that help you in your daily living? Oh, yes, this is what I need. That's exactly what I need. Right. I said, well, in order to do that, you have to roll into your vehicle debt, into your mortgage. And in doing so, you're going to create yourself a monthly cash flow of $400 more than what you don't have already. Oh, but I don't want to increase my mortgage. It's like, okay, but also, do you realize your overall debt is the same? Right? It's just how you're restructuring, which on that end of the notes, that debt is bad, right?
Yes. Yeah.
But to Joe's point, leveraging your equity within the home, purchasing an investment property with that equity, or jumping into a vehicle that has an appreciating kind of return on the investments where you can write that interest off, that is great debt, in my opinion.
Right.
Yeah.
Right.
Yeah, absolutely. Yeah.
And there's so many ways to skin it, right? In terms of the operative word is, what is the goal that you want to achieve?
Yeah.
And so for someone like your client who's trying to relieve debt, that $400 is going to help them out big time. And I always see many people want to pay off their mortgage as fast as they can. The thing is that I look at it as, okay, if I'm going to pay it off as soon as I can, I'm actually trapping the money here where I could actually keep it moving over here just by leveraging what my interest rate is right now. So if I paid minimum, I still have more money that I can actually put it towards other things that are going to grow. So many people in our society don't really realize something called opportunity cost.
Right.
In order for me to pay for something, I should be able to get something back that's higher than what I'm paying for.
Right.
So if I could get that concept leverage is actually a pretty good thing because it gives me more capital to do other things with,
I
right?
know a lot of successful people, and those people who have became successful over the years, wasn't that they had a lot of cash in hand to make proper investments. What they had is they understood leveraging and having an asset where they could tap into that equity, use that equity to leverage into an appreciating asset and
Right.
compounding that year over year over year, accumulating assets over that time and doing the same thing with those assets, accessing that equity and doing a rinse and repeat. Some of the most successful people I know just understand that that type of debt is good, and they've proven
Definitely.
it, right?
Definitely. Totally agree. Totally agree. And everybody is leveraging. They just don't realize it,
Yeah.
right? Oh, I don't like that. Well, where do you live? Oh, I live in
Right.
Delt Ladner. Okay. Did you have a briefcase of $2 million to go buy that house? Well, no, I went to the bank and got a mortgage. Well, what is a mortgage?
Right. It's understanding what debt is. Exactly.
Exactly.
Exactly. Yeah.
So that's why I
Yeah.
like say that is not bad because it
Yeah.
gives you the life that you live. You just have to learn how to manage it correctly to make it to your advantage. And
Yeah.
unfortunately, and here's a little tip, the Income Tax Act, if you look at that 600-page book or whatever it is, it actually is the manual. It doesn't think of it this way. Instead of thinking of it as what I can't do, the Income Tax Act actually tells you what you can do. You just don't know it yet.
Yeah.
Yeah. That's awesome. Okay, I've got one for you, Joe,
Sure.
and we were discussing it, discussing insurance offline, right? And we talked about it on our last pod when you were on here, and it actually a colleague of mine had listened to our pod about insurance, and he jokingly said, and I don't think he was joking, he was actually serious because we got in a little bit of a debate. He said insurance is a scam.
Right.
Right. And I was telling you upline, I have a friend of mine that works for Investors Group, and full disclosure, I was what was it, 20 years old when I was living in Winnipeg. I was encouraged by people in Investors Group to go write my IFIC and work in Investors Group and stuff like that. So I understand insurance, but I don't want to. I have an idea. I don't understand it nearly like you. You're ridiculous. But an understanding of the way it works and my beliefs upon it. Other people have their beliefs on it. What are your beliefs on insurance? Is it a scam?
Well, if it was a scam, wouldn't it be taken off the shelf 100 years ago, or maybe even 150 years ago? Because
Well,
insurance has been around since 1870.
right. So
The
Canada Life, man, Canada Life, Winnipeg, Manitoba is lovely Canada Life. That thing's
exactly
been around since before Winnipeg. They built Winnipeg around Canada Life, I thought.
right, right, and I say this is that yes, it's been around since 1874. It's given out a dividend every single year ever since then. They've had their fun, whatever, all of these things. But I'm going to just, go back here and say, if it's such a scam, talk to the people that had an unexpected death in the family and their agent gave them $1 million in a check, and as opposed to a check, to help them with their finances, to get them moving forward and help their family achieve what they wanted to achieve, even though they had an unexpected death. If that's a scam to me, I don't know. There's something wrong, right?
Yeah.
And yes, there's a lot of nuances out there of what insurance is. There's many people that say, oh, it's the greatest investment in ever. There's people that are going to talk to you about different concepts of how to leverage insurance or how to use insurance. It's really, honestly, what you want the insurance to get out of it. And it's all about planning. So it's not a scam because it's been around for such a long time. And it's some of these par funds are actually bigger than the banks.
Mm.
Yeah.
So security is there because they just know how to make the money work. But in terms
I
of
think,
what it is, it helps families. It helps people
and
generationally.
that's the part that I was going to say, that because that's the part that I thought was the most ignorant way of putting it, was saying that insurance is a scam. Because that, to me, to be kind, I just think that that's a very uneducated comment. Because to your point, right, an unexpected passing and somebody handing you, right, $1 million, $500,000, $50,000 or whatnot to help with the funeral costs and whatnot or whatever, to be able to take care of your loved one, right? Right.
Mhm.
That is, it's those types of things that help go forward. You put your children through school, right?
Right.
Oh, right. Oh no, my father passed away. My education doesn't stop. I can go to university because that was planned for me, right? It's those types of things that, to me, to say that it's a scam is crazy.
Mhm. And to
Yeah.
say that, just to piggyback on that, it's also because my dad cared, because my dad planned for
Right.
this.
Yeah.
That's where it's a little bit more sentimental, because it's not just, hey, you know what, my parents left me all this debt, all of this stuff. Like, we didn't even look at estate planning, all of these things,
Right.
right? And they
I
just
think,
prepared.
and that's it. I think most people get lost, to your point was, to what you were saying before, in the investment side. When people are trying to walk you through the investment side, what's better? Let's say term insurance. It's term insurance versus whole life. What you can do with one, what you can't do with the other. It confuses you. You have, we've spoken about it before in every industry, right? You've got really good people in every industry. So if you're dealing with a money manager that is giving you poor advice, right, you're going to think that this is going to scam. Or, the person that you're talking to, if they've been burnt by somebody before, they're going to say, oh yeah, life insurance is a scam. I got burnt by this guy, da, 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 right? But
What's all?
when you look at it from it's just at its base, and that is the planning for your children's or your loved one's future in the event of your unexpected death, I think that is the part where it just tells you that is, it's a necessity. It is what
Mhm.
every smart person should do.
And yeah, just to piggyback on that again, is that a lot of agents, they really use it as a concept. And so it's kind of like a one trick pony, or it's, a strategy that the rich use, or whatever it is. Well, how about if you're not rich? Like,
Right.
term insurance is just fine. It really depends on the type of planning and the type of situation you're in and what fits towards that. Right?
Right.
There's always that concept where, if you have an empty house, right, and you can't fit a king size bed, are you going to try and fit a king size bed into the room? Probably not. You're going to
Right.
juggle it to what it's going to look the best,
Yeah.
right?
Yeah.
Hey,
And
Joe,
that's what
I have
planning
a
does.
question. I want you to debunk this question, because sometimes you talk to people about insurance and it always comes down to, well, what's it going to cost me? Right.
Right.
So once you kind of get through that, you sometimes hear them, well, insurance doesn't pay. They always find a roadblock or a speed bump that they're not going to pay out. So when you hear people say things like that, um, that I think within itself is a myth, that insurance doesn't pay. Insurance
Hmm.
will find a way
True.
not to pay. So
Right.
what is your comment on that when you hear that?
Well, my question always is more of a rebuttal question, which is, where did you hear that? And the
My
reason,
friend told me.
right, because there's somewhere that they're going to learn that type of concept. So, for example, there's, we'll go back to, what you guys offer, which is mortgage protection plan, which is, a good plan. Don't get me wrong. There's definitely nuances that make it beneficial. It pays out the mortgage when it's supposed to, but if it's a pre-underwriting versus post-underwriting. So I think most of the time we look at insurance because, just like anything, if you hear a story where something didn't pay out, well, they all don't pay out. So it's just, you got to educate yourself on the pros and cons, because honestly, you can look for anything on the internet for what you want to believe in.
Right. So
Right.
again, let's keep this simple.
Yeah.
If you are fully compliant and full disclosure when you are doing an insurance policy, are they never going to pay out, or will they always pay out?
They will pay out as long as you keep everything was true. Everything was what you say it was. When we did the underwriting, we went through the underwriting process. You know, it could be a nurse or someone came by, took your blood, urine, paramedicals, all that stuff that determined at that particular time of your life that you were healthy enough to get this type of coverage for this type of premium. No questions asked, 10 days. I've done 2 death benefits. It took me 10 days. The first one actually was about 2.5 weeks because I had to fiddle around. I've never done it before. The second one was just fine. $350,000. Guy that lost his wife, 54 years old, to breast cancer. And literally a week and a half, I gave him a check, and that helped to his disabled son, who he adopted 4 years ago, to keep going.
There again, right there is the key. So if somebody says to you insurance is a scam, and they say to you, well, why? And he says, well, because they don't pay out. Then ask that person, did that other person lie on their application? Maybe that's why they didn't get paid out. Because here's the key, people, just don't lie, and insurance will pay out. That's what it is. More than likely, if it's not getting paid out, it's because somebody didn't tell the truth. It's not because the insurance companies are not wanting to do it. Because there is that old adage, the only reason insurance companies stay in business is because they don't want to pay out, right? They'll take the money in, but they don't pay it out. That's not true. Right? They take it in, and let's be honest, guys, they hope that they don't ever really have to pay you out in an emergency death, because they don't want anybody to die.
Right. Exactly.
They don't want you to die, right? But in the unfortunate case that it does, then you have the coverage, right? That's what life is. That's what you need. You prepare for the unexpected, right?
And you prepare for it when it's needed, right? So, like I said, you might need not a whole life insurance today,
sure,
but we can convert a life insurance from a term policy to a whole life policy when you're ready. It's really also, you don't have to convert like the whole 2 million or 1 million. You can convert what you need to cover those expenses. And again, because of the fact that you've already gone through the underwriting for traditional life insurance policies, even when you convert it, there's no medical underwriting at that time because they've already been approved.
Right. So let's even jump a little bit further in that when you hear product versus planning.
Yeah, I think it just what I've alluded to before, a lot of agents sell products. And we do, right? Just like everyone has a product, right? So you have real estate, it could be a condo, it could be a townhouse, it could be a detached home, it could be an investment property, right? You know, Geoff, could be a mortgage, it could be a private lend, it could be a B lender, or it could be C lender, it could be different things. It could be a Smith maneuver, it could be whatever. Everyone's got products. The thing is that in my industry, from my experience, most people are selling products because they're the magic bullet, as opposed to what's your situation today and what you want it to have happen. Let's figure out the numbers for it to have happen. So that way it's more certain than it is a hope. Because if people are selling these products, for example, whole life insurance or even universal life insurance, right? Those are the 2 ones that are geared towards investment. Well, we don't know what the future is going to hold. We don't know what the regulation is going to look like in 20 years. We don't know how much taxes we're going to pay at that time. And so let's look at the numbers and figure out the most optimal way to free that money up when you need it. So having a plan is way more efficient than hoping for the product. And unfortunately, I wish we had more planners than we are agents.
Yeah. I think your industry is probably very similar to ours. And I've said this before on our pod, you know, there's 18,000 mortgage brokers you can choose from. but 16,500 of them are not very good, right?
Hmm.
So because they're product based, they're not planning
Yeah.
based. They're transactional versus tell me your whole story. Tell me where you're at. Like asking the right questions is going to determine the type of product, right? And I find that a lot of people, just a lot of people in general, we don't ask enough questions in order to kind of get the ultimate end product, right?
Hmm.
Well, to tag on to that, we see that still in my industry as well. I argue that we as realtors don't do enough sitting down and asking enough questions to make sure that whatever process or whatever plan that we're putting together for them, right, is for them, and we're not behaving as a transactional realtor saying we're just going to sell your house and then move on to the next person. What does your journey look like? What do you need? Why are we selling this beautiful property? What are the reasons, right? And that's always one of the first. That's not one of. This is the first thing I ask when I sit down with clients when we're talking about selling our home. I want to understand why you're selling this beautiful property, right? What is the reason, right? And that helps us put together, right, your journey, as opposed to you're just another single family home, or you're just another condo that I'm going to slap a sign on and I'm going to jet out and done, right? And I think that's yeah.
And I think that this kind of piggybacks is kind of off topic, but it kind of relates to what we're talking about. Is that um, I don't know the stats or anything like that, but for all of our industries, there's a lot of part-timers in our industries.
Yes.
And by
Yes.
having these types of part-timers, they're actually learning more so product versus planning. And so if we're learning just the product because, I'm a nurse or whatever I'm doing full time, they only learn that product. That's what they're going to run with. And that's not the type of work that we should be doing. We should be looking at the planning side.
Yeah, that's a good point. I actually never thought of it from a part-time actually aspect. That's a very, very good point. Yeah.
I mean, 18,000 mortgage brokers, right? That's a lot of mortgage brokers. And so
yeah,
a lot of time, are they all full-time or part-time?
Yeah.
Well, and to jump on that, I think we talked about this last week, Allister. 75% of realtors last year did not sell one single home. So
one property. Yeah.
Wow.
So again, to me, that tells me 75%. When I hear that statistic, are 75% of realtors part-time? They definitely can't be full-time if they haven't sold one single home, right? So
yeah.
So, but that is actually interesting, Joe, when you say that when you're new, because when you are new, it really is learning the product. And I think the planning comes with the mentor that you're with and your experience that you do as you journey through the industries, right? So yeah.
And I'm lucky enough where I didn't start off with I'm not going to name them, but like those particular type of agencies where it's more on the recruiting side. But I actually started with Freedom 55, which, actually came in with the planning side of things. And that's how we actually were trained, as opposed to just, learn about insurance, learn about this, learn about that, and then go sell it. It's more so that sides, right? So from there, it just really kind of puts in, which I would actually like to put in the next one that I believe in, which is, putting a one size fits all type of thing.
That's what I was just going to ask you about. Yeah. Yeah, that's what I was going to ask you about.
What this is.
Right. Yeah.
Right. Because from there, if you're doing a planning side, it's all related to them. When you're doing something that's one size fits all, you're trying to put, a what do you call it? A square peg in a round hole. It's
right. Because I think that's one of the things.
Just trying to force it in.
Yeah, I think that's one of the things that people ask when they really have no idea what their plan should be or should look like, and they're sitting across from somebody that is not focused on the planning side, more so focused on the product side. You'll get somebody saying, "Hey, well, I don't know, is there a one size fits all, just something that kind of covers me for everything?" Right? And I think that those types of things are very dangerous, right? Because again, it's product, it's over planning, right?
Mm-hmm. And the thing is also from there, guys, is that when you're looking at a one size fits all thing, again, it's really tough to, you know, actually do planning. And the thing is, most advisors, in my opinion, and my experience, they look at this. It's like, hey, guys, work with me. I'll get you the best returns. We'll get you the retirement things and all that stuff.
Yeah.
But they fail to actually show you, well, okay, great. The plan is here. Well, what's the plan moving forward to actually decumulate that money?
Yeah.
How am I actually going to retire? What am I going to do with the retirement money? How am I going to drip that money out most efficiently? And I know we were talking about it earlier with somebody from another agency saying that, oh yeah, you know, whole life insurance is not great and you should just do term and then just do everything else.
Yeah.
Again, that could be based on a certain market. It could be based on a certain situation. It doesn't eliminate everything.
Yeah.
So if you have other, you know, situations like a business owner or a high income earner or whatever it is, that's a different plan.
Yeah.
Than someone who's, you know, your nurse or border guard that's looking for their first home.
Yeah.
So the planning is not a one size fits all because term buy from investor difference is a great product or is a great plan for a certain amount of people, but it's not great for a certain amount of people as well. Right.
Yeah.
So I think that, I think in all industries, really, it's not just about whether you're great at this particular product. Is what can you do to help that person? What problem can you solve? And that's where I think we differ more so than most other people, right?
Well,
So
and I just want to even touch on that one size fits all. And that's why it's so important. And we've talked about this before about power teams, and a power team is having a great financial advisor in there, because your buddy at your sitting in your locker room is not a professional. His situation and his advice that he's given you is totally, it could be a totally different landscape, right?
yeah.
And I think as humans, we get in a real habit of listening to what our friends are saying and saying, hey, well, that's, if that fit them, that's going to fit me, right? And they don't really understand the whole depths of why that person may be in what they're suggesting or why they're doing what they're suggesting, because their situation could be much different than the one that you're in, right? And I even throw myself in there. I remember at an early stage of my career, I always compared myself to my brother-in-law. I wanted to be just like my brother-in-law. He was successful and he was like, you know, doing things. And, you know, I would just copy everything that he was doing, use the same accountant. And I went to his account and was like, well, this is what my brother-in-law is doing. And he just looked at me as like, you guys are at a different level. Like, this is not, what we're suggesting here is not going to work for you at this time in your career. And that's what I mean is a lot of us, we want that one size fits all because we take a look at the person next to us and maybe we respect them. Maybe we're like, hey, you know, that's what I want to be. So I'm going to do exactly what you're doing. But sometimes that doesn't work. Right? You're just not there yet.
Mm-hmm.
Yeah.
So shout out to my brother-in-law.
Right, but it gives you a place to strive for, which is a great thing, right? And so I again, my situation is always different from other because I was like, oh yeah, so what do you have? I'm like, well, this is what I have. Like, well, why would you suggest that for me? Well, because your situation is different. I'm incorporated. I have a business. I have, you know, all of those other things where, you know, you're a nurse, which is fine. And that's okay, right? And there's nothing wrong with that. It's just a different plan, right? And so I think that, you know, most people, they look at these types of planning and say, look, this is what I heard. This is what I do. But one of the things that many people aren't actually aware of is how things come out. Because we could do the perfect plan, But the thing is that many people think, for example, RSPs are great, they're fantastic. Like I said, there's a way to go about them. But if I'm a business owner and I know that, in terms of deferral, many people don't realize that many of the things that we have that are a great fit for us today may not be a great fit for us later on.
Yeah.
So learning that word deferral is crucial in trying to decumulate or take the money out more efficiently.
So in simple layman's terms, when you hear the word deferral, put that into kindergarten language, Joe, that people understand when they hear that word deferral.
In where I see it is you're getting the benefit today of what it is today, but maybe not tomorrow.
Yeah.
So, for example, you could talk about RSPs, and they're a great vehicle, like I said, a great vehicle for a certain amount of people, but just know that when you take the money out, you don't know what your tax bill is going to be. It could be higher. Most likely it is going to be.
Yeah.
So take a look at that and saying, okay, is that something I want? Do I want to be paying more taxes as I grade this out? Because I had so many things in my refund that year, my 1 year refund, but you're going to get 30 years of tax deferral that you don't know what you're going to have.
Well,
Or another,
go ahead.
sorry, I was just going to say another one that people don't really, I just had this conversation yesterday actually, where they were saying, oh, I want to put my money into an RSP. Why? Because I want to go save up for a house. And so when they say, okay, you know what, I can take the money out, I think it's like $60,000. I can take it out to go buy my first time home buyers. They don't realize you got to pay that back, or else you will reap the penalties and rewards of that deferral. Right? So just know what you're getting yourself into when you do something. Because yes, it's great that we have the first time home savings account now, that FHSA, but that wasn't there 2 years ago.
Yeah.
And so I got that mistake when I first bought my first house.
Yeah, and to your point of default, what's good for you now might not be what's good for you in 5 years from now. And even take a look at our own lives, like look at where we're at today versus where we were at 5 years ago or 10 years ago.
Mm-hmm.
And if we knew where we were today, we may have structured things a little bit different than at that moment, right? So it goes back to that planning. It goes back to that one size doesn't fit all. It goes back to, where do you see yourself in 5 years? Where do you see yourself in 10 years, especially if you're a business owner, right? A little different when you're employed by somebody, because, to your point, to that nurse, a nurse is a never ending job. There is very unlikely that her life is going to change as far as what that's going to look like in regards to employment, right? But if you're self-employed, your landscape can look much different in year 1 and in year 10. So if you're not planning for a best case scenario, or maybe sometimes a worst case scenario, you're going to cost a lot of money in restructuring your corporations. That's a $10,000 plus bill. So again, that planning is so important, especially if you're self-employed.
Exactly. So people that are transitioning for that, you got to make sure you have a good relationship with your accountant and your lawyer to make sure that you get the right proper structure in place now and know it. And if you're looking at it from a standpoint where, hey, I'm going to be transitioning, maybe take a look at your cash flow and say, should RSPs be the way to go? Again, I'm not saying that they're bad or good. Your transition changes where now your money is actually, your capital is actually trapped in there. And the reason most people, why most people actually put their RSPs, they actually contribute to RSPs, has nothing to do with what the acronym is. It's the deferral. Or sorry, not the deferral, but the tax deduction.
The
tax deduction for that 1 year.
I started doing RSPs because I knew if I put in $1,000, I would get $200 back.
Right.
Right.
Yeah.
So that's the whole reason why I started doing them. But again, me in today, 53 years old, I wouldn't put my money into RSPs. I would have put my money into somewhere else. Right.
Yeah.
So again, back to the deferral, what you would do when you're 23 years old, depending on where you're at, when you're 40 years old, could look different. And again, it goes back to planning.
Yeah.
So Joe, let's wrap things up.
Yeah.
Where can people find you?
Well, I am online. I'm on the social media. We got the website, going clearpointwm.com, Instagram, Facebook, all of that stuff. We are available in BC, Alberta, and Ontario. So if you can always do Zoom. Thank you for this. It kind of makes the world a little bit smaller, so it's fantastic.
So, and again, I want to invite you back because I know today we talked about 5 myths in personal finance, but I want to invite you back and maybe let's talk about the myths in corporate finance.
Definitely.
Right. I think that's for some of our listeners that are self-employed, incorporated. I think understanding what some of those myths are that just aren't true. We're being a little bit selfish because I'm inviting you just so I can pick your brain. So
No.
But,
I want to hear too. I want to hear too.
As well as Allister. Sorry, I get lost. I get lost in tunnel vision. But guys, Joe Tablan, Clearpoint Wealth Management. Check him out. Look him up. Like I said, there is lots of financial advisors out there, but there are few that are really, really good. And I would throw Joe Tablan in that sandbox of the really, really good. Take some of his time, ask him some of the questions, establish a relationship with him, and see where that goes. Because he's going to plan for you and he's going to ask you lots of questions.
Definitely.
Well, this is why we do this, guys. This is why we bring on these guests. This is why I'm here. This is why Jeff's here. We always say, we hope you use us. We really do. But if you don't, if you're choosing not to, then the people that you're speaking to, God, I hope they sound like us. Because if they're not, then you might not be getting the best advice possible. That's all I'm saying. I'm not saying to trust what we say. I'm saying go out, interview us, please. But vet what we have to say. And if you're using somebody different than us and it doesn't sound like us, there's a better than average chance you're not getting the best advice possible.
I think the great thing about what we do here is we educate people along the way to ask the right questions.
Right.
And it is okay not to use us. That's totally fine. There's lots of great people that are out there. But what you need to do is ask those right questions. Right. And if your trusted individuals aren't asking you the right questions, that's when you need to maybe second guess that relationship and see if you are working with the proper people in your power circle. Because again, proper people working within your power network is going to expedite your growth much, much quicker with those good people than possibly with the people that aren't so good.
Right. Well, I'm gonna tag on to that because I'm gonna go back to something that in our pod that we were talking about, the product versus planning. You're sitting down there and you're speaking with that individual and across from you, and they're talking to you more about the product than your plan. You got a problem.
Yeah.
I'm just gonna put it right there. You got a problem. That's it. If the person's talking to you about the product, not the plan, you got a problem. 3 P's. Product, plan, problem. Right?
Right. And I think that goes for all of our industries that I think what makes us really different is that we're great listeners.
Yeah.
And by listening, we actually know what it is that's, keeping them up at night the most, or what is their dreams and goals, and what is their aspiration. Yeah. Because most of the time, if you're getting someone's talking and you're the client, you should be the one who's talking more so, and we should be listening more.
Exactly. And I think to really truly know if you're a good listener, ask Joe's girlfriend, ask Allister's wife, and ask my girlfriend. And if all of them say yes, That's another check mark on that checklist.
Right.
I'm going to tell you why I pass on that one, because she hits me if I don't. So these little tiny, my girl, she's small. My wife is a tiny little girl, but those little fists of fury, they can come at you fast. So I'll tell you, I learned how to listen. I learned how to
Right.
listen.
And
Tough love. That's called tough
Right.
love.
right.
That's what it is. Oh, boys, man, this has been amazing. Thank you so much. I mean, this has been great. Joe, again, our man, we are so happy to have you back here to deliver your insights. We are so happy to have you back in a couple weeks again, to have you back on. And we hope you guys have a wonderful rest of the weekend. I'm looking outside and it is starting, the clouds are starting to open up. It was supposed to be plus 20 over the past couple days. I don't think we hit it, but it's getting nice out there. So I hope you guys, all of you, have an amazing rest of the week. Enjoy some of the sun. Continue to love us, like us, share us, and tell everybody you know about us, because, man, Geoff and I love driving this information and making sure that you guys are getting the best content possible. And please, again, leave us your your comments. So with that being said, stay empowered, stay informed, and most importantly, Geoff,
Stay tuned.
that's right, everybody. Stay tuned. We will see you all next week. Peace out.
Joe Tablan, Clearpoint Wealth. Check them out.
Check them out,
Okay.
baby.
Let's go.
Peace out. Bye, guys.